I'm Carissa Chappelle, and welcome to the monthly quick study of the REIT market with NAREIT's Brad Case. Thanks for joining us, Brad.
Sure.
Let me first ask you, how would you describe how REITs performed overall in February?
It was another strong month. REIT investors gained about 1.25% during February. That's a little bit better than the Russell 2000 index of small cap stocks. It's fairly typical. If you look historically speaking, REITs outperform other, the small cap stock index about 52% of the time. February was actually a good month for blue chip stocks. The S&P 500 did a little bit better than the REIT market, very similar. Again, REITs usually outperform large cap stocks, but only about 52% of the time. So it was a good month for equity investors generally, and certainly also in the REIT industry.
So commercial mortgage REITs and healthcare REITs had the strongest performance in February. What would you attribute that to?
Well, I think there are probably different stories in those two segments of the market. If you look at healthcare REITs, I think quite a few investors, had some uncertainty about whether what's going on in Washington would affect healthcare REIT revenues going forward, and I think concerns are allayed about that. Actually, one of the main things is that healthcare REITs have really shown that their revenues don't really depend on government actions the way that certainly investors used to think they did. The other thing, of course, is that the healthcare segment of the REIT market is more than 3/4 of that segment is in those blue chip companies that are included in the S&P 500. So the fact that it was a strong month for blue chips certainly played out in that sector as well as in the other sectors. When you're looking at commercial financing mortgage REITs, I think there's something different going on. First of all, there's a lot more confidence that the mortgage market is coming back, both in the home financing and in the commercial financing parts of that market. And I think in particular, it was a real puzzle for a few years that REITs didn't seem to be in favor with investors, even though they weren't affected the way that mortgage originators were during the liquidity crisis. And so they have had spectacular dividend yields for several years, and yet investors seem to be afraid of that segment because of the fact that it had the word mortgage or financing in it. I think certainly investors seem to be more comfortable with the prospects of mortgage REITs going forward, and that really played out during February. One thing to keep in mind, though, is that the dividend yield is still about 12.5% for the mortgage REIT segment of the market in general. It's really spectacular.
Are there any commercial real estate sectors that you think may be particularly or possibly impacted by the recent federal budget cuts? I don't
really think so. The major concern about the budget cuts is that it might suppress the recovery or even tip the economy back into recession, and I don't think those fears are well founded. I think the recovery will continue, and REIT earnings, no matter which segment you're looking at, REIT earnings are likely to be driven by increases in operating fundamentals, that is rent growth and occupancy rates, and also by their access to capital that enables them to buy properties at very good prices with very good financing. So I don't think they're likely to be affected by the cutbacks. Even for those REITs that do a lot of business with the federal government, the thing you have to keep in mind is the federal government is saying we need to cut back on expenses this year under the sequestration. They're not saying we need to cut back on rents paid. They're saying we need to cut back on things that can be cut back very easily, and that doesn't include rents. So in general, even those REITs that have more exposure to the federal government, I don't expect it to have much of an effect, and I really just don't expect it to have much of an effect on the commercial real estate industry in general.
Thanks again for joining us, Brad.
It's a pleasure.
I'm Carissa Chappelle for REIT.com.